So here again, what we've done is we've broken down our portfolio into the themes that we are invested in, the weights to tell you the exposures that we have. And it's the same thing that I spoke to you about. And in the last 4 quarters, what has been the top line growth? So the two things that we want to be achieving with our portfolio is position towards those themes that are seeing growth and position towards those companies that have market leadership, ability to have pricing power, and expand on that ROIC. Combine these three together, your long-term returns should beat the benchmark that you are actually mirroring yourself against. Before I finish this presentation, I know pretty much everyone has views, questions on macro. So I just wanted to spend some 2 minutes on certain media-based narratives that everyone keeps reading on a daily basis. One of the big narratives that people keep reading about is China and China collapsing, China finished. Those are the common themes. So let's take some data and let me just present that data to you for you to make up your own mind. In any economy that's going into the verge of a crisis, or let's say is already in crisis, the banking system will always reflect that. Why is that the case? Because that's the system which is most levered in any country. You go back in time and look at the US, where the mortgage crisis preceded the 2008 GFC, the banking index collapsed, right? So that's what this chart actually shows. The same thing in 2011, I spoke to you about why India had a 26% peak to trough drawdown. It was on the back of the Eurozone crisis. There again, it was preceded by actual banking system collapse. China banks, at the moment at least, don't signify any kind of a catastrophe, right? It seems in a healthy position as we speak. Obviously, we can all make up our mind. We can debate whether it is fraudulent and they are getting protected. But purely from the market's perspective, I'm just commenting on the fact that it is not yet heralding a meltdown. In fact, it's actually quite contrary. It is US banks which are actually massively underperformed in the last 1.5 years versus China. And the reasons pretty much are well known. It's got to do with Treasury, the bond sell off. But US banks are in a much worse situation than actually that of China. Here again, if China is really imploding as the world's largest consumer of commodities, you should start seeing that in commodity prices. That is not getting reflected as we speak. If I then look at consumption, and tourism and gambling are a proxy, according to me, for consumption. The Macau actual tourism arrivals are returning back to pre-COVID levels as we speak. The China vehicle sales, which is auto and auto consumption, seem to be extremely healthy as we speak as well. And finally, true reflection of consumerism, which is Alibaba's revenues. They recorded their strongest first quarter on record since inception of the company. So there are two narratives out here. So start looking at media narratives. You can trust it and you say that China's struggles are real and everything is going to unfold. And it's important to understand because I don't come from the school of thought that China is going to unravel itself and India is going to present itself as the beacon of hope. I think in this decade, you're going to see EM do well. As a result of which, for EM to do well, China cannot collapse. Right? You need China to hold in there and India will outperform because of India's exposure both in FII portfolios, India's exposure in manufacturing, India's exposure in world consumption will go up. So end of the day, I personally believe that China is not collapsing yet. There are problems and the problems are genuine. Its exposure will come down, but it doesn't mean it is collapsing. It's important to just appreciate this before we move on.